The issue of investment in the industry is absolutely basic, because without continuing investment there won't be an industry, and the questions we need to be asking ourselves as an industry association include what needs to happen to ensure that investment continues in the industry so that years out the industry will continue to exist. Australian industries sometimes have a habit of disappearing in a puff of smoke, even when they're quite large. You might just think of the wool industry, which was an important part of our GDP right up to the 1970s and then kind of disappeared overnight. As far as the forest product sector goes, we have a system whereby native forestry and plantations play a complementary role. As far as native forestry goes, which has been in existence for about 100 and something years, it is supported by or governed by a set of regional forest agreements between the federal government and the states. These are 20-year plans for the exploitation of elements of the native forest estate, although we need to remind ourselves that in most states more than half of native forestry is already protected by national parks and reserves. Plantations provide these days about 75% of all saw logs, and they're about 1.3% of the total forest area in Australia. Total employment, as David said, it's a variable figure and depends how you add it up, so I won't argue for that figure. As far as native forestry goes, governments are crucial to the continuing existence and extraction of timber from the native sector, and governments provide access to the resource. There are still significant native forest industries in New South Wales, Victoria and Tasmania, and they provide a saw log and a pulp log resource. So with native forest wood chips, for example, they are a very substantial export, and indeed Australia is, I think, the largest exporter of wood chips in the world. For the last few years, the politics of native forestry have been quite toxic, and the undermining of the industry by environmental non-government organisations has been palpable, has had very serious consequences, and has been accompanied by a kind of pusillanimous attitude of state and federal governments, which have allowed this to continue. Yeah, as far as investment goes at the moment, it hasn't much changed from these two-year-old figures here, but there are changing ownership trends in the Australian forestry sector. Most especially, I would draw your attention to the managed investment schemes, these MIS schemes that have been tax-driven. They're funded by tax expenditures, and they have been quite a costly method of ensuring investment in plantation softwood and plantation hardwood. These have hit some very significant problems in the last few years, and conceptually we as an industry need to think about moving on from MIS, not abolishing it. I mean, it will kind of wither on its own anyway, but to think through the implications of where the MIS arrangements have led us, and to ask ourselves, well, if we want to continue to have a forestry industry, what do the incentives need to look like if they don't look like the MIS set? There are a lot of problems in the forestry industry, as we probably all know. Some of them are quite horrendous, but I've tried here to break them up into different segments. As far as growers go, growers of plantations, the big issue, of course, is what incentive they have to invest, and MIS investment is right down now to a very small figure. The raging global competition that happens, partly because much of the industry globally, not in Australia, but globally, is unsustainable, and we can have cheap, unsustainable timber, or we can have less cheap, fully sustainable timber, and that is a public policy choice that governments need to make. And the growers in Australia are caught up in the middle of this conundrum. in the middle of this conundrum, state authorities have started to speculate on whether they should be charging forest growers for the water that they use. Now, this is intercepted water largely, that is rainwater. The economics of the plantation industry are very finely balanced, and adding either a fraction of or up to 1% to their gross costs is probably enough to push many growers over the edge. So it's a very serious public policy issue, and we have been significant actors, I think, in trying to get the facts on the ground, as it were, and to speak to involved government agencies about the extent to which plantation forestry extracts water and the effects of attempting to charge or licence them for that. The MIS distortions really are another problem facing especially the growers, and these were not anticipated when the MIS schemes were first raised. I mean, being tax-driven, the early growers paid insufficient attention to the terrain in which the asset was planted, the distance to ports, or the possibility of value adding. And as we look at the Australian economy, and we ask ourselves, well, why would you invest in manufacturing anything in Australia? It's certainly a question you would ask yourself in forestry. As Rick mentioned in his introductory remarks, of course, we aim to have an elaborately value-added industry because that's where the profit is. If we can value-add the product and on-sell product which is not just a commodity, then we will have transformed the industry from being a low-profit rural industry into a high-profit manufacturing industry. That, unfortunately, is still some distance in the future. And again, I return to the question of the MIS distortions and how it is that we can move incentives beyond that so that we get the emergence of a different sort of plantation industry. Again, many of the problems facing other sectors of the industry are well known. The high Australian dollar, which encourages imports and makes exports very difficult. The competition in pulp demand around the world, and as I said earlier, Australian wood chips are actually a significant export item for the industry. The rigidities of the Australian industrial relations system, where we have a kind of gridlocked wages system whereby people are able to negotiate wage outcomes that bear very little relationship to their productivity, is unique to Australia, I think, and quite a cost imposition on an industry that struggles constantly with its levels of costs. Likewise, the regulatory regime in Australia, both federal and state, have proved extremely costly for this industry, especially in its attempts to value add. The context for investment, that is to say, how can we encourage investment, but, you know, what does the whole terrain look like? Well, there's enormous global competition from suppliers around the world because we have a relatively small industry in Australia compared with the large industries globally in places like South America, North America, parts of Asia and indeed Europe, which competitors generally have much greater scale than we have in Australia and much lower costs. Again, part of the context is the regulatory impact that that law has on costs in Australia. These are environmental, which are predominantly state government impositions. Occupational health and safety, which is kind of reflection of the fact that you can have as much OH&S as you want to pay for, but in Australia we're making a decision that we want maximum OH&S, and of course that comes at maximum cost. Transport problems in Australia, again, affect investment because it's a very expensive part of the production process. Supply certainty, I mean, this is partly an issue of sovereign risk. One of the difficulties of investing in the forestry industry in Australia is that state and federal governments keep changing their mind. They keep moving the goalposts and punishing people who made investment decisions further back in history under the assurance of a different regime than has emerged. I mean, a topical example of that is probably the tar and investment in southern Tasmania, where a world-class facility was built at the invitation, mind you, of the Tasmanian government by a Malaysian firm that uses product which is fully sustainable, fully certified as to its environmental credentials, is aimed at an export market, and which represents $250 million worth of investment, but is currently being undermined by environmental activists, against whom governments, both federal and state, more or less refuse to take any particular active role in opposing. That is a classic instance of sovereign risk, and the whole industry in Australia is challenged by the recurrence of crystallising risk that comes from government itself. Government, in other words, is not always the answer to the forestry industry's investment problems. It is sometimes the cause of the problem itself. Hence my third point, that public policy in Australia is often less than fully rational, given the predominance of sovereign risk in any investment decision in the industry. And of course, all investors in the industry have to face the relatively high cost of borrowing money and the high and rising exchange rate. The economy within which these investment decisions are made is continuing to grow, and on a positive note, there may be some opportunity for the market for wood products to grow out of that. For example, there are continuing prospects for low value added construction inputs. That's been around for many decades, and although it is not growing spectacularly, at least there is healthy growth there and has been for a while. But as with anything manufactured in Australia, almost without exception, higher value adding is very difficult in forestry. And we have seen this in all elements of manufacturing in the forest and wood products industry in Australia. In pulp, in paper, in engineered wood product, and in softwood sawlogs, where the more you try to value add the product, the more you add a manufacturing element, the more problematic the finances of the enterprise become.